This video is part of our series called Insightful Ideas from Smart People. And this video highlights Warren Buffett's theory about why gold is a silly investment. So we will show 4 of Buffett's quotes to provide the essence of his theory, and then provide 6 of our own perspectives for additional context. So quote number 1 from Buffett, which is my personal favorite, is, "Gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head." Quote number 2. "Gold, however, has 2 significant shortcomings, being neither of much use nor procreative. True, gold has some industrial and decorative utility, but the demand for these purposes is both limited and incapable of soaking up new production. Meanwhile, if you own 1 ounce of gold for an eternity, you will still own 1 ounce at its end." Quote number 3. "I have no views as to where it will be, but the one thing I can tell you is it won't do anything between now and then except look at you. It's a lot better to have a goose that keeps laying eggs than a goose that just sits there and eats insurance and storage and a few things like that." And the last quote is, "Gold is a way of going long on fear, and it has been a pretty good way of going long on fear from time to time. But you really have to hope people become more afraid in a year or 2 years than they are now. And if they become more afraid, you make money, and if they become less afraid, you lose money. But the gold itself doesn't produce anything." So those 4 quotes nicely sum up Buffett's philosophy on gold, and we think they make a lot of sense. And so let's show you a couple different perspectives to add to this. Perspective number 1 is for people who want to own gold thinking that we may go back to some type of gold standard. And we just want to show that this is really just a non-starter. US gold reserves have been flat since 1970 at about 8,000 tons. In 1970, those 8,000 tons at the current price then represented 2% of M2 money supply. In 2016, it represents 3%, but basically it represents a very small fraction of the money supply in circulation. Convertibility of currency into gold would not be practical with so few reserves. In perspective number 2, let's put the amount of gold holdings into perspective. The market value of all the gold reserves at the US Treasury was $291 billion in September of 2015. If the US sold all its gold reserves, it would barely cover the government's interest expense on their debt for just 1 year. The projected interest expense for 2017 is $304 billion from the budget, so you can see where we stand on that. Some people seem to think we have these huge gold reserves, but in the big picture, it's not very significant. Perspective number 3 shows where gold supply comes from and where the demand is. It's interesting that 25% of the gold supply is from recycled sources, and then 50% of the supply is used for jewelry and fabrication, and the other 50% goes towards investment holdings. So we're actually only using about 50% for some type of consumptive purpose. Perspective number 4, geopolitical and conflicted global governance have been mentioned as a reason to own gold, and people often hold gold for some type of apocalyptic scenario. But we ask, in a post-apocalyptic world, would you rather own a piece of gold or a piece of farmland? And we would rather own the farmland. How would you buy a loaf of bread with a gold coin? Would we go back to shaving pieces off like they did in previous centuries? So we don't think the fear scenario justifies owning gold. Perspective number 5 is, how does gold perform in recessions? We've highlighted those in the red boxes here. I don't see any pattern that gets my attention, but perhaps you see something. I don't see anything here that makes me want to own gold for recessionary protection. Inflation protection, perspective number 6, is probably the most common reason given for owning gold. Gold has provided 7% compound return since 1968 and 5% since 1990. That's in nominal terms. So there has been some real return. And if you look at the chart, gold generally does track changes in the consumer price index, so investors do seem to think that it has inflation protection, but it's still just based on the greater fool theory. You're buying it because you think someone is going to buy it from you at a higher price, but it has no real utility. And lastly, perspective number 7, and this is a positive one, surprisingly. There is one possibility that we see for real value creation with gold, and that is in terms of material science innovations and new applications that are discovered for gold. As an example, gold nanomaterials have been found to be an exciting area of research, particularly relating to renewable energy. They have been shown to improve the efficiency of solar cells, which take in light from the sun and convert it to energy. So there could be some real upside there, so we like that fact, but that is the only glimmer of hope that we see for gold. So hopefully that gives you a good perspective on owning gold as an investment. Thanks.